The risky nature of startups in emerging markets has seen most institutional investors shy away from innovators. Now, this was a key conversation at the 2016 Seedstars Summit in Geneva, as reported by CNBC Africa's Bonney, Tunya.
Emerging markets are fast transforming into centers of innovation, changing into incubators where talented entrepreneurs grow. It was a rare mix of innovative disruption as 54 young entrepreneurs from emerging markets gathered at the Seedstars 2016 Summit in Geneva to try and pitch the next big idea to the world. The startup ecosystem in the emerging world has almost gone full circle, with many observers noting an apparent convergence of innovative solutions between legacy and emerging markets tech solutions.
It's very exciting to see so many innovative ideas and emerging enterprises, especially with what relates to Africa. I think it confirms the trends that we've seen as an investor in the market for many years, that you have a new generation of enterprises that is emerging. They are designed from the outset for scale and for viability. And the companies that we're seeing here echo the companies that we've seen on the ground, with a new generation of talented managers and the need for a lot of capital to bring them to scale.
There's been some evolution. And the major evolution that I see is it's very difficult to distinguish between African technology entrepreneurs and entrepreneurs from anywhere else in the world, whether they're from Serbia or from the US. The language is very similar, the kind of problems they are solving is increasingly similar, and it's complicated for me to say what I think of that. In one respect, it makes me nostalgic for the good old days when, when I spoke about technology, someone said African technology, people had an inkling of what I was talking about. But on the other hand, I'm deeply aware that we were also being boxed into a particular category. Right. And now is the time for African technology entrepreneurs to solve global problems.
And while the African startup ecosystem continues to exhibit dynamism and increased investor interest, the high risk associated with investing in the budding entrepreneurs is a deterrent, especially among individual investors. Industry critics are of the view that it is time governments from emerging markets stepped in to incentivize the sector.
Coming to emerging market, I think there are so much public money, also talking today with some banks and whatever, that are going there and are, let's say, dispersed. I think that everyone should do something to say at least a 10% or whatever, a good part of the public money, I think should go to entrepreneurs, not to governments, to ONG.
Right now there are a lot of investors that want to come into Africa, but governments need to be more open, I think, about who they're willing to let in, how they're willing to let them in, that they are enthusiastic and excited about building out the startups, building out their entrepreneurs, about taking their entrepreneurs global. That even means opening up borders.
So what you see a lot is that today legislation and regulation is making it hard for companies to do simple things like incorporate, hire someone, these kind of things, which then makes it much harder to start a company. So on the one hand, I think government plays a key role in reducing these barriers, in reducing the regulations that inhibit companies from being built in the first place for financial or logistical reasons. The other reason it plays is incentivizing people to invest in companies, build companies, and grow companies.
Africa has a lot going for it as far as growth of startup ecosystems is concerned, namely the 1.2 billion population, a vibrant mobile money economy, and an ever-increasing internet penetration largely driven by the use of smartphone. However, as Aaron Fu, a managing partner at Nest Africa, points out, information and talent exchange remains a crucial link in the innovation chain.
We've been investing in startups for the last 5 years in the US, Europe, and in Asia. I think some of the initial building blocks that Africa could really deal with is not just a flow of entrepreneurs, but also a flow of tech talent, marketing talent, other individuals that are necessary to build up the startups here. I think that's really key. And we're more than happy to sort of play a role in that as well. And I think it's also about making sure that investors are able to get their returns out of the continent, right? You look at many scenarios where it is erratic because there's an erratic but justified fear that the capital could be locked up, right? So I think some of those, infrastructural issues and regulatory issues need to be taken care of as well.
Following the pitches here, it was evident that valuation of innovation for early-stage businesses is indeed a complex issue.
We look at valuations in different ways. And I think if it's this early stage, a seed stage round, where they don't have much traction or metrics on which to base a valuation, we do it from the perspective of what we call convertible notes. And convertible notes are basically saying, I'll give you the money now on condition that in 18 months' time, I will convert into equity based on a certain valuation at that point in time.
Expansion into regions other than the country of origin is a commonly used success indicator amongst startups. And while this opens the entrepreneurs to new markets, access to non-financial support like legal aid, marketing and mentorship prove hard to come by with this rapid growth. So what makes a truly global tech company? That is the question. Is it the location or the reach? But as that question abounds, one thing is for sure. There seems to be a convergence between legacy and emerging market tech solutions. Reporting for CNBC Africa, I'm Bonney Tunya in Geneva, Switzerland.